The worry, and I'll just put this bluntly, is that ideology will trump practicality for this Labour government as well. And actually, the risks are to growth, to investment, to innovation in the UK. Do you share those risks?
I don't really. I mean, when we think about what this government has done, actually in the run-up to the election, they spent a lot of time speaking to industry in terms of what industry wanted. I think quite rightly they've put growth at the very heart of their agenda. The question is, they're clearly operating within a very tight fiscal envelope, and we know that. And some of the communications that have come out most recently have prepared the country for that. But at the same time, what they've done is they've actually built on a lot of the work that the old government has done. Everything around Edinburgh reforms, the Mansion House Compact, and they've built on those. So the recent announcements around house building, the National Wealth Fund, and most importantly, pension reform. For me, pension reform is the way to unlock growth in the UK.
Right.
So when one thinks about the amount of long-term capital that there actually is here in the UK, it's nearly £5 trillion held in pension funds and insurance companies. So in order to actually unlock even a fraction of that to put into long-term infrastructure projects, which ultimately will drive growth, is absolutely the right route. The question is, how do you do it? And actually government has a key role in really just unlocking that capital alongside industry and regulators.
Gosh, you've raised so many issues. I could dissect everyone. But let me just go on one of the points, the last point you raised. The history of private-public partnership is checkered, to say the least. The history of profitable infrastructure investment for the private sector is tortuously bad and concerning in many areas, whether it be hospitals, whether it be toll roads, whether it be tunnel links, you name it as well. It's a tough area for that pension money to make money from as well. The prudence that the pension industry has been run under so far has actually by and large served its customers pretty well as well. Is this about driving growth or actually creating better profits for those pension holders as well? Because I worry that it's not necessarily the same thing.
So, well, first let me correct you slightly, because actually the returns that British pensioners have received over the long term has been suboptimal.
Right.
So as there has been a focus on low fees and on low risk, that has ultimately meant that we have lost sight of risk-adjusted returns. So that means that British pensioners are at risk of actually getting lower returns when they eventually retire than pensioners in Australia and pensioners in Canada. So whilst you talk about PFI and what had happened in the past, actually financial markets have changed quite dramatically over the last 15, 20 years.
But most people want to be able to put money in their pension so they don't have to rely on the state as well. And a vast number of your clients and our viewers are being told, actually, no, there's going to be limits put back on again on your pensions. It's going to be a lot harder to extract your money without higher taxation as well. That's not going to drive more money into pensions, is it?
Well, I think we're going to have to see, because actually there's two big pools of pensions. There's the defined benefits and defined contributions. Actually, on defined benefits, what I think is interesting is how the Labour government has talked about how to consolidate those defined benefit schemes, for example, starting with local authorities. So one of the main issues here in the UK is we have a highly fragmented pension fund system. So we have thousands of pension funds, which are less than £100 million. So when you have £100 million worth of assets in a pension fund, it becomes very, very difficult to make those sophisticated decisions, and most importantly to diversify outside of fixed income. So actually the consolidation is going to be key in actually just driving that value that ultimately will benefit pensioners.